Our management partner, Encash Spend, in association with partner Perfios, our payments partner, Cash Repayments, and our CEO dinner partner by HSBC. Folks, more and more non-bank companies are offering financial services such as bank accounts or wallets, payments, and lending. Companies and organizations, businesses of all types, depending on the levels of maturity, including retailers, big tech, software companies, car manufacturers, or logistic firms, are preparing to launch embedded financial services to serve businesses, customers, and miscellany of consumer segments. For customers, the appeal is the ease of use. We're going to have a panel discussion on this topic called the embedded finance driving disruption in banking. And I'd like to call on stage our moderator, Mr. Sandeep Laxman, Head of Fintech for Asia Pacific and Japan, AWS. And joining him on stage are the set of other speakers, beginning with Mr. Ramanathan RV, co-founder and CEO at Hyperface. Mr. Shivashish Chatterjee, co-founder and joint managing director, DMI Finance. Amol Sonbarse, co-founder and CMO, Instantpay. We have with us Shailesh Deshpande, director, growth, Jocata, and Priyanka Kanwar, co-founder, Falcon. So with this context, over to you, moderators and illustrious speakers.
Thank you so much for that. I'm assuming everyone can hear us because I can hear myself in here. Hi, folks. We got a fantastic panel. I know it's a little after lunch. You might be a little sleepy, but rest assured, with the kind of speakers we have on this panel, it's going to be really interesting, right? Thank you for the MC for making that introduction. But I would like to have a quick introduction from all the panels themselves, right? Not only just their names, but what the companies do, right? What's the value we had? And then we'll take it forward from there, if that is okay. Yeah, sounds good. Okay, I'll go first, given I'm moderating, right? So, hey folks, my name is Sandeep Laxman. I head Fintech for AWS. And if you don't know what AWS is, we help provide technology products for fintechs to build their products on, right? So, like you switch on your AC or you switch on your fans or lights at home, you can click some buttons on screens and you could have services from compute to database to machine learning, etc. Right? Ram, why don't you make an introduction of yourself and Hyperface?
Sure. I guess everyone knows AWS, Sandeep. I know. Hi, my name is Ram. I am the co-founder and CEO of Hyperface. We are a company that actually makes co-branded credit cards more fun and immersive and digital enablement, essentially. That is the boring word for it. But making it fantastic for the users. How can we offer that on a platter to companies that want to issue co-branded credit cards and make it extremely work well with their loyalty programs, like your Amazon credit card or a Flipkart credit card, for example. That's what we do.
Shiv?
Thanks, Sandeep. My name is Shiv Chatterjee, and I'm the co-founder of DMI Finance. DMI Finance is a Delhi-based NBFC. We are a regulated entity, and we are a digital lender. So we work with pretty much anybody who can speak to us in the language of APIs, and that includes fintechs, it includes large platforms, it includes OEMs. So we are a very active digital lender on the consumer lending and MSME lending side.
Thanks, Shiv. I'm going to go to Amol next.
Thanks, Sandeep. So my name is Amol. Instantpay is a full-stack business banking platform. So what we are basically doing is we've created on the one side of it for small and medium businesses sort of an interface where they could carry out their end-to-end banking with us, starting with, say, account opening to payments to collections to lending. That is what we are doing for small businesses. And for enterprise businesses, we have a full-stack banking API. So we cater to large enterprise clients and we connect with them and drive products and launch new products for them on the payment side of it. Yeah,
Thanks. Shailesh?
Thank you, Sandeep. My name is Shailesh Deshpande. I'm Director Growth with Jocata. We are a subsidiary of BillDesk, which all of you must have heard of. They are India's largest payment service provider. Our focus at Jocata is to work with large financial institutions, banks, NBFCs, even fintechs now to really digitally transform their credit decisioning process. We also have recently started a credit intelligence practice where we enable real-time decisioning for consumer onboarding and credit decisions via scoring engines. And we work with a lot of new fintechs and NBFCs and banks to enable embedded finance for them increasingly.
Thanks. And last but not the least,
Thanks,
Priyanka.
Sandeep. Hi, I'm Priyanka Kanwar. I'm the founder of Falcon. Very simply, we help any company or financial institution like an NBFC, MFI, or banks become a fintech. So what that means is that we're a banking as a service full stack platform across cards and wallets, across payments, accounts, and lending. We'll help anybody build a bespoke product and launch it, as quickly as possible, right? So very happy to be here with all of you.
So Priyanka, let's start with you, right? You spoke about what you do, right? But where does embedded finance and how has that helped you, right? So for example, the question I'm asking is why are you solving this problem of creating a single platform for banking, for example?
Yeah. So that's a great question, Sandeep. And we have actually been, both my co-founder and I, along with our team, we've been around in fintech long enough. And when I started, it's a funny story, but when I started right out of college a few years ago. And when we first came back, to India, we started working with a few banks. And at that time, UPI wasn't even around. Payment banks weren't around. A lot of the protocols, that have now come were not there. So for us, as a fintech, I think we were in that lot where there were probably around that time around 200, 250 fintechs. Today, there's 6,000. So we started at a time where, financial institutions or banks were just learning how to work with fintechs to make new use cases, to make new products possible. And both my co-founder and I, honestly, personally also had those experiences where we often joke that, we spend most of our 20s just trying to integrate with banks. We had a lot of exciting ideas, but it would take 18 to 24 months just to launch something, right? So I think for us, this is also very personal, where we realized that, two major trends are taking place. They will continue to take place in the next decade, right? So both on the financial institution side, if you look at banks today, whether in India or globally, you look at commercial banks, small finance banks, payment banks, even NBFCs and MFIs, you'll see that everybody is moving towards an OPEX stack plus model, right? So this is a model wherein banks come and say that, we want to enable fintech use cases for our customers, whether it's retail or SME customers. We want to be able to work with fintechs. There's, dozens of fintechs who are coming to us. We want to be able to integrate with them. We want to help them innovate. But we are not able to do it with existing models, right? So that's where, I think there has been quite a lot of organic demand from financial institutions saying that we want a new age model where we don't only have vendors, we have true partners who can help us not only with the tech stack, but in innovating, building on top, and helping us talk to developers and product managers in their language. Because today's economy is run by developers and product managers, and nobody knows that better than you, Sandeep, right? And the second, I think, big trend that's taking place, which is completely pushing this movement forward, is that a lot of tech companies, right? I'm not only talking about the largest fintechs, but A16Z, for example, loves this trend. They say that every company will become a fintech. And we are seeing that on the ground, right? We are seeing agri-tech companies who come to us and say that I've got millions of farmers. Can I enable savings accounts for them, right? We see somebody like an India Post Payments Bank coming to us and saying, we have 5 crore customers, right? Can you help us with both a self-serve and assisted model where we can embed not only basic payments, but even products on top of it like micro-insurance, like bill payments. Can we leverage our network for that? So I think the idea behind embedded finance is that it's completely opening up new distribution channels, right? It's a new way of delivering financial services to the end customer. So that's the reason that we do what we do.
Awesome. Thanks for that. And speaking about India Post, I found that very interesting. And I think, Shailesh, you also are working with India Post. Correct me if I'm wrong.
That is correct. So Our mandate with India Post Payments Bank is to essentially, it's driven by financial inclusion, and as Priyanka said, they have the best network in this country. They are not allowed to lend because they are a payments bank. However, this distribution that they own to every single pin code in this country it's priceless. So there are 2.5 lakh postmen who are now being digitally enabled to distribute small ticket credit, small ticket loans on behalf of banks, NBFCs, and public sector banks even, to all of these millions of people who could be in need of credit. So it's a very exciting implementation for us, especially because it's India's first retail implementation of OCEN, or the Open Credit Enablement Network. So I think that really is going to throw open that particular implementation is going to throw open the potential for all kinds of embedded finance flows in the retail space.
Can you give the audience some other examples of how Jocata works in embedded finance?
Sure. So I think Priyanka touched upon that earlier, right? There are two sides to this equation. One is a banking as a service stack, or a BaaS stack, which really brings every single product or service that a bank traditionally offers, whether it's a savings account, current account, credit products. All of those products are getting exposed to the outside world through APIs, and that's how that banking as a service model now brings the bank capabilities outside the bank, which is where you are. And the other side of this sort of two-sided marketplace is all of those platforms, whether your marketplaces or your favorite cab aggregators. They all have access to millions and millions of consumers, and most importantly, they have context. And this is important to understand in embedded finances. Banks have traditionally tried to sell products to their customers without any context. Like, all of us have gotten calls from a bank saying, do you want a home loan? Do you want a car loan? When they have no clue whether I'm actually trying to buy a home or not. Whereas what embedded finance enables is that context in which a lender can place their product service offering, so that the conversion rates are very, very high. The cost of acquisition is very low. At Jocata, what we do essentially is this end-to-end journey building, from all the way from the brand side or the marketplace side into the bank's BaaS stack or their core stack, to really allow embedded finance plays to happen. Whether you're buying we do this for a very large auto OEM, and you can walk into their showroom and buy a car in minutes because we are plugged into the bank at the back, and the decisioning is in real time. You can go to Amazon and get an instant, get your iPhone financed in real time because we plug into a whole host of banking infrastructure at the back. So that's what we enable largely in the space.
Yeah, and the idea also why I'm asking everyone to talk about the examples is for all of you also to get an idea of how pervasive it is, right? It's beyond fintech. It actually expands, and it connects to what Priyanka talked about, where every startup is going to call itself a fintech because of this. By the way, we're going to have. Can we have a mic there ready, please? Because if you have questions, I'll ask for. I'll let you guys know. So just raise your hands. We'll get you a mic so you can actually ask us questions. Interestingly, I actually moderated a panel yesterday on financial inclusion. Anyone here attended that panel? I see a couple of hands up. Thank you for attending that one as well. So there actually, we had Ketan, who was a CEO of MSWIPE. He actually spoke about PIDF. So PIDF is Payment Infrastructure Development Fund, right? And that actually gives payment companies, it's got a budget of something like 800 crores to deploy devices to tier 4 to tier 6 cities, right? Remote locations, Northeast, Jammu Kashmir, Ladakh, right? And what I found interesting is, in the end, what you're trying to achieve is financial inclusion, right? So when you work with India Post, for example, the aim goal is financial inclusion. But the mechanism you're doing is through embedded finance, because they have the distribution network than you take in, right? Amol, I want to come to you next, right? And because you work directly with banks, right? You help them give a 360-degree view, right? We kind of spoke about this a little bit earlier, but why can't banks do that themselves? What happens that a bank needs to work with a fintech like Instantpay, right, to do that? So just walk us through that.
So look, one thing which we have learned in the last couple of years and during the pandemic itself is everyone has to sort of expand the revenues in terms of where the next customer is coming from and probably how the different new revenue streams would be coming through. Okay, that is what we've learned. And I think the banks have also understood that. So that is where they are reaching out to fintechs to sort of have different journeys for the customers, have the data in one place. So that is where it's coming from. And I mean, we talk a lot about on the consumer side of it there. A lot has been done on the consumer side of it where we talk about embedded finance, we talk about cab aggregators and say Ola giving a credit card to make your payments over there. And we talk about, say, e-commerce apps giving credit cards. A lot more has been done on the consumer side. But what, as an organization, we feel that there's a lot which needs to be done on the business side of it. Okay, so that is where our focus is. So what Instantpay does basically is we are completely focused towards the SME side of it and the MSME side of it. What we are trying to create is a similar sort of an embedded platform for businesses where they could carry out their payouts, open bank accounts, carry out their payouts, carry out the collections, manage their vendors, accounting. One another challenge what we've seen is there are a lot of single product companies here. I mean, SME, for that matter, who's not that technically sound. The data is scattered across all platforms. So we see that there are payment companies, there are collection companies, there are accounting modules, and your data is not at one place. So eventually you can't use that data to come out to a conclusion. And that decision could be a credit decision at the end of it because MSMEs need that financing. And that is one sector that is deprived of financing. Even traditional banks are not pretty keen or understand the need over there. So that is where somebody like a player like Instantpay comes into the picture, where we have, where we have all these MSMEs on our platform, SMEs on our platform. We have the data points from payments to collections, and based on all those data points, we work with lenders to sort of give credit to give working capital credit to these businesses. Banks, in a sense, how this helps banks is we are helping the bank retain the customer at the end. Okay, when we acquire a customer for a bank, we are actually reducing the bank's CAC over there. We are doing the acquiring in that sense. Okay, so we act as, we act as an extended arm of the bank in that sense, and that is how we are helping these banks.
Got it. I want to bring in Shiv next, right? Shiv, we kind of discussed this a little earlier, and the banks don't lend to everyone, right? You run an NBFC, you have a large market base for yourself, right? How does DMI, I had two thoughts. So one is, how do banks, how do you see yourself fit into embedded finance and, driving financial inclusion, right? Across the country. But also, is there some things that banks can do and cannot do that, NBFCs like yours can do?
Sure, thanks, Sandeep. So I would like to take a step back and put embedded finance in a continuum of basically evolution of finance. So the way I think about it, and I think it's hardly unique, credit is kind of like a lubricant. So you can't have an economy function if there's no credit, just like you can't have a piece of machinery function if there's no lubricant. Eventually the machinery just clogs up and jams up and stops. The most efficient piece of machinery is where it has the lubricant applied uniformly, and where that lubricant is not visible in an invasive kind of a way. So when I think of credit in the economy, to me, embedded finance is simply the iteration that gets us closer and closer towards what is ubiquitous finance, right? So finance needs to be a background process. It needs to be ubiquitous. It shouldn't be something which draws attention to itself. And when we get there, that's essentially when I think we have economy functioning at full capacity and achieving its highest potential. So everything that we are doing, right, whether it's each one of the people here and the companies that we represent, all we are doing is increasing the efficiency of the transmission of capital from savers who have the money to the people who are making investments who need the money. right? We are all intermediaries in that supply chain of capital, moving capital from savers to investors. Now, what is the most efficient way of deploying this capital? That's kind of where we come in. And to answer your question in a slightly convoluted way, I would say that capital comes in many different flavors. And the prime characteristic of capital is risk. So what we had discussed earlier is that eventually the person who has, or the entity that has capital, wants to allocate that capital into different risk buckets, right? Some of it is very safe, some of it is very risky. And overall, they achieve a portfolio effect and they achieve some kind of a portfolio allocation of their capital, which reflects what the desire of that entity is to achieve from that capital. So what does that mean when we think of the Indian context and embedded finance? What it means is that we should not be thinking of banks as the only source of capital, which is kind of where sometimes the thinking that we fall into is, I'm a fintech, I need to find capital, let me go tie up with a bank. Or I'm a fintech, I need to find a large NBFC to tie up with, right? Because each of those, especially banks, represent a particular kind of risk appetite. Bank capital comes from depositor bases. And depositor capital specifically is supposed to be pretty safe. So when we force banks to take the entire gamut of risk, from very safe to very risky, we end up with a highly inefficient use of that capital. And that's kind of where NBFCs come in, which is why we've seen the growth of fintech driven by NBFCs largely, although banks have obviously become much more active recently. And that is because NBFCs represent a different kind of capital. Similarly, there are other pools of capital, such as AIFs. There's foreign capital coming in through FPIs. And each of those represent a different risk appetite. And in order to achieve the final goal of what we are trying to achieve in India, which is, financial inclusion at scale, ubiquitous finance available for everybody, economy functioning at full capacity, we need each of those sources of capital to have their appropriate place in this ecosystem.
That's a very, very interesting point you made, Shiv, especially on the types of capital and how it goes. So this essentially then becomes correcting the supply to the right kind of demand, right? So you won't need to correct the right kind of capital to the right end consumer, and embedded finance is the connector in between.
Yes, that's exactly right. So a lot of the work that we are doing in fintech and in this group here is solving for the demand side of capital, is solving for how to find the most efficient way of channeling demand. But once we've channeled demand, that demand has to be channeled to the right supply of capital as well. And today I think that channeling of demand into the right supply has not yet happened properly. And I'm sure it'll happen over time, right? It is probably happening faster than I realize. But certainly the noise is around solving for the demand side of credit rather than the supply side of credit.
Got it. Last but not the least, Ram. So, you've been a veteran in the payment space, right? This is your second payment company now, if I'm not mistaken, if I got my count right. Like for us, right? So let's say as a novice looking at embedded finance, doesn't UPI solve everything? Why do you need, embedded finance in payments?
Cool. So look, embedded finance always existed. If you go to, say, a Chroma store, and then you find a Bajaj Finance counter, or you go to a TVS two-wheeler showroom and you find a TVS Capital person sitting there, right? In a variety of ways. Even I'm assuming a lot of you here went to IIMs as well and IITs as well, right? Where student loans are just there, available right on the campus on the day of admission, right? Now, all these are embedded finance only, right? What today that we are seeing is that digital is making this, is actually putting this on steroids, right? Like Shiv said, now we are on a continuum, right? Where commerce starts and where finance starts, that can actually intermingle. Now, a simple fact, let me give you, right? Where we all purchase on Swiggy, Now, suppose the cart value is 500 rupees. And on the checkout page, suppose you see an offer that says that, hey, listen, if you add 100 more rupees to your cart, you will get 20 percentage discount on your ICICI card, for example. Right. Now that purchase decision there is actually influenced because of this romance between the commerce institutions and the banking institutions, right? And this is embedded financing. It exists everywhere. Just that digital makes it enormously difficult, but it also opens up enormous amount of opportunities, right? Shailesh said, this is all about the context, right? Now, when you have the context of the customer, the financial product can be made really, really relevant at that moment for that customer, right? And the decision can be influenced whether to purchase, whether to go ahead, whether to add one more item to the cart. All of this is influenced because of this embedded financing that exists, that integration that simply exists between, say, a Chroma-like a commercial entity and a Bajaj Finance like, say, a lending entity, right? And like I said, commerce is moving towards online more and more, and this offers enormous opportunities. Efficiency, right? Digital is all about efficiency, like Shiv was saying. Now, a very large institution is required for a very large bank to partner with. But even a small store that is actually selling, say, mobile phones can actually tie up with, say, a fintech company and work with a lending institution to offer credit at the time of purchase, right? This is effectively what embedded financing is actually doing across the board, right? We are bringing in efficiency, distribution, and profitability. Of course, there is a reason why Chroma and Bajaj are working together, right? Because there is profit, right? Neither of them are suffering a loss because of each other, right? So that profit always exists, right? And customer is also benefiting, mind you, right? Nobody is a loser in this equation, right? This is how I see it, right? And of course, the challenge for us to solve is with regards to digital, right? The rules of the games are quite different. In case of human beings that are sitting there, it's very easy to frame the rules and say that, look, these are the roles and responsibilities. But in case of digital, things keep shifting. That continuum exists, and that poses a huge challenge to the regulators, right? And of course, that's a big problem to solve. But like I said, look, this is a humongous opportunity.
Yeah, that's actually very interesting, right? So I once, when I just bought the phone, I bought a new phone recently, and he actually said, do you want to go EMI, right? That was the first question. And I remember when I told no, I said no, I'll just make a full swipe. And he gave me this look of, as if he's seen a ghost, right? So my follow-on question was like, obviously, it's like, okay, what percentage of your customers take a phone on installments, right? And he says it's around 80 to 90%, right? And I was surprised. This was like one store, right, where I bought from. So now that you say all this, I kind of can make the connects between the points.
Absolutely.
So I want to take a step back. I'm going to get into some more questions. But by the way, any questions from audience till now? Okay. Oh, wow. We already have questions. Okay. So the gentleman back there, can we get him a mic, please? With the gray jacket at the back. And then after that, the lady at the front. So just hold. When you ask the question, please give your name, which company you're from. And only one question. No sneaking in the second question after the first. Just one question per person.
No worries around that. No, great. Thanks, Ram. Thanks, Shiv and Amol. Thank you, everyone. Great insights you have provided. So just one quick question, right? So, when you just mentioned that you went to a phone shop and you got a phone for yourself and you were offered a EMI. Now, the obvious problem that comes with the embedded finance is that predominantly you are servicing those customers who are digital greedy, right? These guys are already getting served. Now, the problem comes in when you have to go beyond that level. And that is where Shiv was mentioning when you go to a bank, the kind of depositors' money comes in, that's where the risk is different and NBFC's risk is different. So where does, the marriage comes in? Because there is so much of data gaps that is coming, various apps, they are not talking to each other. And that is where the inherent problem is. Because while we talk about the credit has to go beyond the tier 1 kind of borrowers, like the tier 2, tier 3 and tier 4 kind of borrowers, that is where they are facing the problems. So where do you think, with this regulator eye also coming in, and we've seen in the last 3 months how things have changed dramatically for various fintechs. So how do you think you can marrying the tech business plus the regulators plus going after those areas which still provides you a substantial kind of opportunity. So that is one area I keep wondering how as a fintech is going to evolve in those spaces.
Who's that question for?
For everyone, like who can answer that?
Okay,
Yeah.
so Shiv, I want to give it to you.
Sure, I'll be happy to take that. So I think it's a process.
Sure.
We are not going to start on day one and suddenly have solved the grand unification theory, right? So we have come an incredibly long way in the last 5 years. And I'll give an example of a particular program that we run as DMI. It's in conjunction with Samsung. And it's a phone finance program. So if you were buying a Samsung phone, maybe that's what they were offering you. But the interesting thing here is that roughly 50% of the people who buy a phone on finance are new to credit. They have never taken a loan before. So I think whether or not they are digitally savvy is unclear because by that definition, I think most of the country at this point is digitally savvy. Because smartphone penetration in India is very, very high, right? We have something of the order of 800 or 900 million smartphones in the country at this point. So I think we are addressing the problem one step at a time. Sure. It's not something that we will have solved entirely, but we are making incredible progress. When the fintech revolution in India started in 2016, let's say, there were 70 million CIBIL records. I think today that number is probably north of 400 million, right? So in the last 5 years, we have basically gone up 600% in terms of bringing people into the formal credit system. And that is step one of financial inclusion. I don't know if that adequately answers the question.
Anyone has a different take on it?
I don't have a different take on it. I think I just want to supplement what Shiv said, which is that a lot of these products, they have a financial inclusion angle to them, and they're actually an on-ramp to formal credit. It's not that buy now, pay later products only target subprime customers, right? It's just that banks have traditionally had no way of assessing their credit worthiness because they're not in the CIBIL database. There is no credit bureau. They've never taken a formal loan. So they're not all customers who cannot be lent to. I think embedded finance and what has happened over the last few years has really enabled that on-ramp to formal credit and accelerated that through capital providers like DMI and technology providers and platform providers who all come together and kind of allocated their capital based on the risk appetite of the different institutions. I think that really has accelerated that jump from 70 million to 600 million or whatever that number is today.
That's a very important point, right? Because in order to get a traditional loan, you need a credit score.
Right.
In order to have a credit score, you need to have an history of loan.
Yes.
Right? It's kind of a chicken and egg.
Correct.
And embedded finance actually kind of solves that to a certain extent, getting in that new set of players into the ecosystem, right? Building that out. That's so I didn't think about it from that point, but very interesting. There was a lady over here who had a question. Can we get her a mic, please?
Hi, I'm Radhika Biani from Narottam Siksaria Family Office. My question is, will ONDC impact embedded financing businesses? And if yes, in what form and fashion?
Who's the question for?
Anyone who would like to take it.
I can take it if nobody else wants to. So, I think ONDC is going to be, this is the open commerce standard that's coming in India that allows essentially a customer on one e-commerce marketplace to basically search for items that could potentially be listed on other marketplaces in the country. It's a one of its kind infrastructure that is being proposed by the government of India. And I think ONDC will only accelerate this whole embedded finance and the ability to provide credit because it makes the pie much bigger, right? If today you're on marketplace A and the moat that all of these e-commerce marketplaces have is the customer base and the data and the analytics and the knowledge they have about that particular customer's likes and dislikes. ONDC is going to democratize that in a massive fashion. What that means is that if you look at how the India stack has gotten built over the last few years, right? Starting with identity, with Aadhaar, payments through UPI. You have account aggregator for open banking standards. You have OCEN for credit enablement. You have ONDC for e-commerce. So it's a very systematic step-by-step progression to get us to a point as a country where we are in fact one of the most sophisticated nations today in term payments. I think everybody knows the UPI success story. We are ahead of almost the rest of the entire world in the payments, in the retail payments industry at least. Similarly, a lot of these initiatives are actually step-by-step progression towards making us the most mature digital economy. And I think ONDC is only going to amplify the potential for embedded finance, because now these customers and these lenders have access to a much wider base through the standardized APIs.
Shiv, Ram?
I think I would like to add on to that the history of human prosperity is a history of specialization. So when you had one entity doing everything, that doesn't allow for the pie to grow very much. But when you allow for specialization, that's when the economy grows, that's when the ability to produce more and more becomes fully tapped. And this goes back to, I think, a question earlier that Sandeep, you'd asked, that what happens with banks as they start to lose control over some parts of their business because of things like embedded finance, where pieces of their business are getting taken away and there are fintechs coming in and specializing in them. And I think the answer to that is, again, very simply, that the greater specialization you have, the greater the total output of the system. And so ONDC, again, should lead to a plethora of business models that allows for people solving very specific pieces of this finance supply chain that eventually leads to significantly greater output that makes it better for everyone.
Ram, you want to
Just briefly, see, ONDC expands the pie for commerce and enables more participants in the ecosystem, right? Now, that could potentially allow for more competition, means more imagination and more thinking around product, right? So that could potentially have a consequence that embedded banking could actually become better. But I'm going to wait and watch to see how ONDC delivers rather than speculate whether it's going to expand the pie or not. Because expanding the commerce pie, that's a very, very big challenge. It's a massive challenge.
Interesting. So for the folks in the back, seeing all of you stand, my legs are paining, though I'm comfortably seated here. But we do have a lot of empty seats in the front, so feel free to come here, come in the front. And don't worry, it's not school, so I won't ask you any questions. But if any of you have questions, any other questions before others, I'm going to continue ahead. If anyone has questions, just raise your hand anytime and we'll get you. So Mike here, please. Again, please introduce yourself. But before that, there's one thing I want to add, right? When systems talk to each other, a bigger value is created. So if you look at the UPI system, right? UPI is actually built on the IMPS system, right? And that is nothing but a set of switches that allows banks to talk to each other, right? So this is like a knowledge graph, right? They say the knowledge graph grows exponentially to the power of the number of connections which is done, right? So I would think of it as in this manner. Whether now the potential is fully achieved or not is a very different question, but it enables that. Would that be appropriate to say? Yeah. Yes, please.
Myself is Surya Prakash from Union Bank of India. My question to Shailesh regarding this token-based framework. You are telling that it is related to this embedded finance. So it is under evaluation. So what do you expect that new avenues for token-based infrastructure we can provide this embedded finance?
So as a bank, I think one of the first things you have to do is to become AA compliant account aggregator. You have to be on the account aggregator framework, and you should have what is called as an LSP bridge. It's a component, it's a piece of software that allows a large bank like yourselves to connect to the external world, right? If you want to do an token-based journey for a personal loan, for credit cards, for auto loan, whatever the product may be, you as a bank need to essentially expose your capabilities, your credit policies, your onboarding rules, etc., to the outside world, so that Others can ping your systems in real time. They can push data, financial data, KYC data at the bank, and you can give an instant response back. I think that will really open a lot of avenues for not just financial inclusion. Obviously, all of your banking correspondents, all of your agents through whom you source today, your branches, they can all be enabled on the same framework. But it allows you to, for example, go out and do partnerships with large auto manufacturers, with large education loan providers or educational institutions in the country. So all of these products today can be run on Oaken. That's the potential of Oaken. It's still early days. I think we are at least 6 to 12 months away from seeing any significant scale on Oaken because banks are still getting ready. But I think the potential to transform your sourcing digitally for certain products which are unsecured typically and require an instant response, I think Oaken provides a huge opportunity for banks like yourselves.
Okay. Awesome. Any other questions? Just raise your hands. We'll get your mic for this one. But I'm going to push in one question from my end. And Priyanka, you've been very quiet. So the question is going to be for you, right? We've talked a lot about what's happening, what are the advantages. We've got a room full of fintechs and financial services companies who are going to solve issues. So I wanted to know from all of you, what are the challenges today in that is stopping the progress of embedded finance, right? Or problems that need to be solved to accelerate the progress of embedded finance within the country, right? So we could start with you and then to whoever it is, but I wanted to start with you because you've been quiet.
Yeah, no, thank you so much. I think you're right. These are very, very early days for embedded finance. Like Shiv said, we have made massive progress in the last 5 to 10 years, right? And I was just reminiscing while everybody was talking. I was thinking about, back in 2010-11, if you remember, when the microfinance industry had started to rise significantly, you saw that there was a fundamental shift, there was a mission drift, and there were challenges of, overlending. There were challenges where the RBI had to step in and the regulator had to sort of clean up, some of the policies, right? I think that same shift is what we are seeing today with fintechs. Right, and I personally, as a founder, I always have to be, I have to be eternally optimistic. So I see it as a positive development. I see it as a coming of age, where we're saying that fintech can no longer be ignored. It can't be ignored by banks. It can't be ignored by the regulator. So the recent regulations that you've seen in the last 3 to 6 months, I think a lot of it has sort of have come about to push fintechs to sort of think in that direction where, consumer protection also becomes extremely paramount, right? So I think, from a regulatory perspective, definitely all of us today are forced to rethink, a lot of our flows. We're looking at how do we sort of push data privacy, data protection, how do we push consumer protection, right? So I think regulation is definitely a challenge in a very, very positive way, I think, because the more compliant you are, the more responsible you become, right? And I think that brings me to my second point as well. When we were talking about financial inclusion, I completely agree that, we've made a lot of progress where we had only 6 million POS terminals, acceptance points earlier. Today, we have 200 million UPI acceptance points, right? We have a very large base. In fact, I think UPI has led to a very, very large, base of people coming into the formal economy. But when you talk to people on the ground, when you talk to MFIs who are lending to SHGs, and you talk to, folks who are lending to small sort of, enterprises and MSMEs, right? You'll find that even though smartphone penetration has increased, only about 10 to 15% households have smartphones. And when you look at, a segment like SHGs, you'll see that, women may not even have access to that, right? So therefore, you've seen, solutions like UPI Lite come about to really push the boundaries in those areas where network connectivity or smartphone penetration could be a problem. So I think when you look at that segment, I definitely am very optimistic about how embedded finance is pushing financial inclusion. But I think all of us, have to be even more responsible when we are thinking about those segments, right? Those segments are vulnerable. So when thinking through that, I think there are challenges around, how to really shape experiences for those segments, how to increase financial awareness. I think that still remains something to be sort of tapped.
Amol?
Yeah, so look, a couple of years back, we had open banking and then banking as a service. These modules or these frameworks actually sort of paved the way for embedded finance, and that is what we are talking today. And I believe, we are at the right time right now to have some sort of regulations around open banking and banking as a service so that we could enable embedded finance, and we could have those journeys created and build in something like what we had like in Europe. There's a regulation around open banking which is there that gives clarity on what needs to be done. So I believe it's the right time now. There are good number of fintechs who are doing something on the open banking side of it. Banking as a service has taken up, and now embedded finance on the business banking side of it as well as the consumer banking side of it. So I believe if we have clarity from the regulators around open banking framework, that would actually drive embedded finance. And once we have those regulations, it would create a framework where there would be clarity on what is possible, what would be required to be done. So that is something which is there to look forward to, and that would be really interesting.
Shiv?
So I think the single biggest challenge to the growth of embedded finance, or to essentially the growth of any innovation in this space, is the fact that you have entrenched business models on the capital side which are not exactly in sync with this idea of disaggregation. So it takes a long time for large entities such as banks and large NBFCs to embrace a new paradigm of the credit supply chain. And even after they've embraced it, it takes a long time for them to actually be able to implement it within their own system, which has been built over years and decades. And so I think a large part of the innovation in embedded finance today is happening, again, as I said, on the demand side of credit. And eventually we need that to filter over into the supply side of credit, such that the banks, the NBFCs, and the other capital providers become comfortable with the idea that they no longer own the entire supply chain of credit, and that they have a niche role to play. And that mindset change, I think, takes time.
Got it. Ram, anything from you?
Yeah, just one quick thing, right? See, non-regulated entities doing regulated activities like lending and investing is a problem for the regulator, right? And that is at the crux of this problem. When we talked about this digital continuum being between the commerce entity and the banking entity, be very clear that the commerce entity is never going to get into a regulated activity, right? Their Chroma is never going to give us a personal loan. But when a fintech that actually comes in between and actually provides this service, there is this nervousness that, okay, hey, is this fintech going to also lend, right? And then you've got balance sheet lending, off-balance sheet lending, all those, very complicated terms, right? But the crux of it is the roles and responsibilities are still not clear, primarily because it's a very nascent industry at this point in time. And I think as we evolve, as fintech companies also evolve, I'm hoping that even the venture capitalists will see that the value that they are ascribing to a lending business today will look very different 10 years from now, right? When that happens, fintech companies will automatically gravitate to non-regulated activities, right? And I'm looking at this as an evolutionary force. It's not that we've spoken the final word at this point in time, right? And hopefully I was able to give some color into the problem that exists today in the market, where fintech companies are perceived with a little bit of doubt by the regulators and the banking institutions.
Yeah, I think every if you look at Europe, you spoke about this PSD2. Australia has the open banking framework, right? That's worked really well for them. And I think, I kind of agree that it's at some point it's going to come in. But for the gentleman in the green shirt there, we have last 3 minutes. You had a question? You have the mic?
Hi, I'm Vivek Desai from PayU. Hi, Ram. So my actually original question was around regulations, but I think the last question just covered that in terms of how regulations are affecting embedded finance. So my other question over here is like, considering embedded finance looks to offer non-financial companies ability to offer financial products to the users, right? While you take care of all the integrations with the financial institutions. My question is in terms of customer grievances, right? And this is a point where financial services is not a one-touch product, right? I could be taking a loan, I could be taking EMI or payments, or even an insurance in an embedded finance manner, and I could have some grievances for the product that I have. Now, as a user, when I buy that product, say I go to a car mechanic and I'm buying a car insurance over there, but when I'm actually going to take a claim, I actually have to work with the insurer. How do you all see this problem from a user statement, from a user flow being solved for, right? And do embedded finance players also play a role in this, or would you leave it to the financial provider or the non-financial provider who you're working with, right? How do you look at this?
In fact, that's a very, very good question. Like he pointed one of the most fundamental problems today that exists, right? Like one of my problems has been that we don't have NPS for regulated entities today in the country. That the regulator doesn't actually enforce NPS, right? That is very sad, right? And when we are doing embedded financial products, how do you make sure that the support is at the same level to the support of, let's say, the other entities that we have, that we are talking about here, right? It's a difficult thing, and that's why I say that this is an evolutionary force. We can't sweep this under the carpet. It's going to take time for us to address it. It's like we've just fit a Ferrari engine into an old car, right? And now we are expecting this car to perform very, very well. It's going to take some time, right?
The tires need to be changed for sure if it's a Morris minor. Anyone wants to have a take at that question?
So I think I have a slightly different take. If I understand your question correctly, you're talking about the customer experience in terms of what happens when I take a loan or when I buy a wealth product or an insurance product through, let's say, a brand. And then when it comes time for servicing of that loan or I have grievances or there are issues, who do I go to? So today, I think all of the brands are focused only, they are the points of sale. The way it runs today is none of them want to take on the additional obligation of having to service your customers' loans as well, and statementing and figuring out any grievances, etc. So I think today that's where we are, but you can always do value addition on top. I don't see brands today doing that. There is a gap in the market where people are not willing to take on the additional responsibility of servicing the customer.
Interesting. That being said, we are at 6 seconds left, so I'm going to get a big red times up at me. But wow, that was a fantastic discussion that we had, right? I wish we had another 45 minutes, but we do have a panel after this. Like I said, there's like a big red times up telling me. But I would like to thank all of you for a wonderful, wonderful discussion. And folks, you can find us on social media, LinkedIn. I don't use Twitter, but I'm sure some of you do. So you can find us and connect with us. And of course, we're all available after the session also for talks. Can we have a really good round of applause for a fantastic discussion today? Thank you. Thanks. Let's take a selfie also.